I actually think it's going probably break 100, which where it was in January, and my price target is 69 to the downside. That might seem a little aggressive on 420 on a day that it was just Elon day here. But to me, I think there's something else going on here with Tesla. We know that he had been selling Tesla shares all year last year to fund his purchase of Twitter. We know that SpaceX has been for sale. He's been looking to raise capital that way. You know, if this stock were to continue to go lower, if they are pushing out a manned trip to the moon, and that's what the whole idea of this rocket launch was today. Twitter, they just marked down from $44 billion to $20 billion. He's got $13 billion. This is not a generally very liquid person. He used to be able to get whatever lines that he wanted to, but now he's got all these banks on the hook for this debt that he can't service based on Twitter's businesses. So to me, he might be entering the end game here a little bit for being the CEO of all of these companies and being that levered. And now, when you look at the stock right here, it's broken. The fundamentals have shifted. Not a single analyst on the street downgraded this stock, okay? There's plenty of price target downgrades. They will be downgrading this stock lower. I'm just telling you that, people, over the next 3 to 6 months or so. And that's when you have a situation where, you know, who knows if he's going to be in control of this company in the not so distant future, because it doesn't seem like the Elon aura is playing out right now, the 3 biggest companies that he's involved in.
So even putting aside this sort of pivot, because they did sort of pivot yesterday when they were saying we examine pricing on a weekly basis, we're going to keep cutting prices to keep the volume up. That's growth at all costs. That's sort of growth mode company for a company that may not necessarily be in growth mode right now. But putting that aside, you think the stock goes to 69 because he is too extended, that there's a liquidity issue.
No, I just think that I think there's a demand issue. And I think there's a competition issue in China. And I think that if you're looking at the prices of an average price point of $45,000 for your car, and you've just seen margins go from 25% last year down to 19% and likely going lower, they have a big fundamental problem that I didn't hear a single analyst talk about. There's this guy, Gary Black, and he was on Max's, he was on Last Call last night. He's like the biggest bull ever on Twitter. He's always talking about Tesla. He seemed to have turned on this story. He's lowering his estimates. So earnings estimates are coming down, margin estimates are coming down, delivery estimates are coming down, backlogs coming down, and inventory's going up. Does that sound like a good fundamental situation for you?
I don't know, Rebecca. What do you think?
I think he has a strong view on this. You know, yeah. I would back up because Tesla's special. I don't want to comment on Tesla per se, but just thinking about what's going to drive the auto demand. You know, the consumer right now is still fine, I'd say even globally, but we're definitely seeing moderation. You know, Q4 last year, we saw the biggest increase in nominal household debt that we had seen in 20 years. So the credit card spending has picked up a lot. The excess savings has been reduced. And now we're starting to hear anecdotally from the banks and from companies like Amex that they're starting to get a little more nervous on that consumer spend. And so if the consumers start ratcheting back, jobless claims today we saw ticking higher again. Guess what they're not buying? Teslas.
Well, they're not buying.
How far you have to cut the cost to get them to buy.
I agree, and they're not buying any cars. And if you look at how Ford and GM have traded over the last couple of days too, and I agree, today's data anywhere, whether it was that Philly Fed, whether it was the jobless claims that are still, you know, like the market's still tight, but they are weakening.
Yes.
And I think you have a dynamic here where it to me, it just gets back to the multiple of Tesla. It's never made sense to me. It makes even less sense now. And I believe it's a car company. I don't believe it's anything else. So, and I look at the chart that tells me this is the last mega cap tech stock that never broke its downtrend going all the way back to 21, to November or December of 21. That still hasn't happened, whereas all the other ones at least started to outperform and started to break to the upside. And I'm not saying that they do forever either. I think there's a reason why the triple Qs and the mega caps kind of broke out around SVB. But those are the things that make the most sense to me right now about Tesla, and it's never been clearer, is that the multiple now, especially if it is a car company, if they are playing the competitive game to outproduce everybody else and take on the competition, I still think competition's pretty tough out there, too.
Yeah, I was actually surprised that it closed the day down less than 10%. I thought because it seemed like a narrative shift that they were management was presenting on the conference call.
It is. Yeah, they really focused on the fact that they are trying to increase demand kind of at all costs. So they're willing to cut the prices on their cars, which is interesting because they've done it so many times. I think this is their 5th price cut, that now it comes to the point where consumers are saying, well, are they going to keep doing this if they're so concerned about the economy? Yeah. Exactly. And so I think there is going to be some of that dynamic, but it is clearly a problem of their demand going forward. But I'm with Tim here. I think on the valuation is really where the concern is. Just to put this in perspective, it trades about 42 times next year's earnings. A Ford and a GM are at 7 and 5 times next year's earnings, just to show how expensive that is. And I think ultimately it's eventually got to become closer to that.